We're saddling up our horses this week on the fastest 4 minutes in finance. Will the ride in 2024 be different than the ride in 2023? Hello and thanks for joining us. I'm Scott Inman. Well, my dad and I love to watch Westerns. He likes the old ones better, with stars like Clint Eastwood and John Wayne. I like the newer ones better, like Tombstone and Young Guns. But once in a while, there's a remake of an old one that we both get to enjoy. The Magnificent Seven was one of those, originally released in 1960 and remade in 2016. And it was great fun to go to the movie theater with my dad to enjoy that one together. The Magnificent Seven was remade again in 2023. This time, it was the financial services industry that brought the term front and center. We might argue about which film version of the Magnificent Seven was better, but there's no arguing that the Magnificent Seven stocks were the stars of the market last year. The Magnificent Seven stocks are Apple, Alphabet or Google, Microsoft, Amazon, Meta Platforms, Tesla, and NVIDIA. In 2023, those seven stocks posted an average return of 111%, while the S&P 500 index, of which those seven are members, gained 24%. So are those seven companies just growing that much more? According to our partners at Richard Bernstein Advisors, the answer is no. Now, before we get to that, take a look at this chart. This shows the percentage of stocks that outperform the S&P 500 index in every year going back to 1990. You can see the yellow line represents the median of 49%, meaning roughly half of stocks performed better than the overall index on an annual basis over the past 30 plus years. But look at 2023. You can see it's the lowest number on that graph. The years that come closest to being as low as last year were in the late 90s. That was right before the tech bubble burst. The RBA group notes that, quote, narrow leadership is typically the result of deteriorating fundamentals in the broader market. But this group believes that is not the case this time. RBA screened for U.S. companies that have forecast year-to-year earnings of 25% or more. In other words, companies that are expecting to significantly grow their revenue. As you can see on this chart, there are 82 companies that fit that description. Only 3 of them are in the Magnificent Seven, and they rank 25, 72, and 74. That leaves 79 other companies that may have significant growth potential, but are not getting near the attention that the Magnificent Seven are getting in the stock market. RBA writes, quote, we've described the attractiveness of the stocks outside the seven as a once-in-a-generation opportunity to invest in this broad and ignored group. Now, we are in a presidential election year, and there is still uncertainty around interest rates and inflation, but this should tell us there is opportunity in the stock market for this year and beyond. Now, as always, this is for information purposes only. It is not investment advice. You should work with a financial advisor to build an investment strategy that fits your risk tolerance and financial goals. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.